Hello, Cleveland, and everyone from everywhere else. Welcome to your 10-minute TA for the day, Monday. Hope everyone's week is starting off just great, just dandy, just peachy. Keep that head up, keep your chin up, keep a positive attitude, and that'll keep you going. The more positivity you put out there, the more positivity will come back to you. It's called the law of attraction. If you've never heard of it, look it up. It's real. Before we get in the charts, please give me a like, give me a subscribe, give me a follow, whatever platform you're on. And as a thank you, here's a very cute duckling. All right, let's get into the charts. This is a new Luminous track. He just put it out a few days ago. You should check it out. Anyway, so since yesterday when we were making our video right around here, we were talking about, hey, this could continue. We were coming out of the bull flag and see if the measured move kept going, and it did. It actually got right up to our measured move, a little bit higher than that, but it got right up to that measured move. So we can go ahead and delete this bull flag. Oops. Oopsie doopsies. Hit the wrong button. Delete that bull. Delete that. Delete that. And that. Now, what are we seeing? Well, staying over the 200, that's bullish. We are, what is this out here? EMA ribbon. I think I just added that when I pushed that wrong button. Anyway, so we are seeing price action put in a higher high, maintaining this uptrend that we've been in. Higher lows, higher highs, higher lows, higher highs, more visible here on the 6-hour chart. But also, we are very far from the 21 now. So what's going to happen is most likely, if the bulls want to keep price action moving up, and, well, they may want to, well, we could see price just kind of move a little sideways here as the 21 moving average comes up to meet it. And as it does, we could see another explosion. How far would it go? Well, let's get rid of a little thing there, and let's draw the bull flag that would form if that were to happen. We'll include the wick because why not? Usually I wouldn't want to be more not sustainable. What's the word? Conservative. Be a little more conservative in my estimates, but we're just gonna say it's like that. And we're going to take the measured move from that breakout point, and it would be 92,800. That would be great. That would put us back over the 90K resistance level. That would, if it flipped it here on the 6-hour chart, we could say that this bear flag has been invalidated. But yeah, that's great. Now, let's do a quick Fibonacci retracement on this move, though, because let's say that instead of staying up there, it kind of comes down. Right, so I bet you the fib, if we did it, well, that 85K level is going to be at the 785, right around there. And the 618, so the 5 is where the 21 is now. So, hey, maybe in the next half day or so, we'll see price action come down to about the, 382 here at 86.8-ish, where it could meet with that 21 and bounce off of it. If it doesn't, though, then, a retrace back to that 200 is on the table. But hopefully we just see it come back down to that 786 somewhere in this golden pocket. If it does come down to that golden pocket, well, our measured move comes down to about just under 90,000. Right there to that resistance level that we have to get over in order to, again, invalidate this bear flag that's on the 6-hour chart that we've been looking at. So, yeah, let's see. Let's hope for, this move but we got to be prepared for, you know, a retrace back down to this golden pocket. If it gets past the golden pocket, this bull flag is invalidated. And then we're looking at a different chart pattern. All right, let's move on to the indicators. So here we'll see that the Stokes are pointing to the downside. They are at a point where we have bounced from before over the last, couple of days or yesterday. We bounced twice off of this level yesterday, near this level. We're a little bit lower than it now, but price action is holding up pretty well, and RSI is holding up pretty well. Though we are seeing a very slight possible, I say possible because this high here could still go up a little higher, but right now it's lower than this high. And this high here on price is lower than that high. So that's a bearish divergence here on the 90-minute chart. Possible bearish because the second high on the RSI could still turn around and get a little higher if the Stokes also turn around and get a little higher. If that happens, cool. We'll probably see this sideways movement like I was talking about. If this does drop, though, then expect that return to the golden pocket of the fib retracement that we just talked about. Let's take a quick peek at the 22-minute chart, see what their indicators there are telling us. Also, the volatility is very high here on the 90. Come on, 22. What's taking you so long? There it goes. Yeah, okay. So we're seeing some downward movement here on the Stokes as well. But RSI is holding up well as well. Holding up well as well. The RSI is holding strength. Showing strength still. With, it had a little bit of a divergence there. Here from these lows to this low. Lower lows on RSI, flat lows on price. And then it came up a little bit. Yeah. Okay, so the 22 looks like it's deciding whether or not it wants to continue upwards. Let's take a look at the 5. Give us some idea of the 22. Okay, look, the 5 is back in overbought territory. Or I'm sorry, oversold territory, while the RSI maintained its position in bullish territory. So there's a chance here on the 5-minute for it to turn around and keep going up. Bounce off of its... What is it? Was that the 200 or the 21? I mean, the 1 minute over its 200, kind of in overbought territory, but that's okay. It could get stuck up there and keep going. A little far from its 21, but if it came back to it and put in a higher low, continue that little uptrend. But we're getting a little too low. These lower time frames are very noisy and can kind of switch off very quickly and go in different directions. But the 5 is saying that the 22 does want to turn around and keep going up. Or at the very least, the Stokes here want to turn around and go back up, which would keep us in this position or take us all the way out of it to continue that move to the upside. That'd be great. I would love to see it. We're over the 200 on pretty much all of the time frames except for the 6 hour now. Let's take a look at the 6 hour. We're moving closer to it. You know, and this is what we want to see. We are, you know, the resistance here of the bear flag is right where we are right now. So this could be a spot where we find resistance and turn around, which would be fine. It's okay. Even if we do, then we want to see a higher low to maintain this uptrend that we're seeing. So we got the higher high here. Now we need a higher low to maintain it. So we don't want to go any lower than like 84. But it'd be better if 85 held, you know, because then we could actually flip it here on the daily. But I'm getting ahead of myself. We'll stick with the 6 hour for now. We got the Stokes at 100. Could get stuck up here if we see the 90 minutes turn around. But if the 90 minute continues this oscillation downwards, then expect the Stokes here on the 6 hour to also continue its oscillation downward. We see the RSI here also moving into overbought territory, kind of telling us, hey, maybe we are about to get a little reverse off of the top resistance line there of that bear flag. Hopefully it stays over 85, like I just said, because the bear flag is still in effect. We can move the breakout point, though, up to here, where we're at, and we'll see that we're now looking at a measured move down at about 73.2, as opposed to that 68 level. But it's still pretty low. It would be lower than, you know, the 786 retracement on the big bull flag that we're looking at on the daily. And so let's look at the daily. We are breaking out of the downtrend. That's great. We're continuing this small uptrend that's more visible here on the 6-hour chart. That's great. This divergence is still there, and now we're seeing confluence up higher highs or higher lows there, higher lows there, higher highs there, higher highs there. So yeah, this trend may be reversing. This downtrend may be reversing. If it reverses, where do the downward trending wedges reverse to? Usually they reverse back up to where they started, which is our all-time highs. Now, don't get too high on the hopium, but yeah, that could happen. But we do have a lot of, resistance above us. The first major one is that 90 that we keep talking about, because that would invalidate the bear flag. Again, would invalidate the bear flag and put the 6-hour chart over its 200 moving average, which would be a great sign. We are now over the 200 on the daily. It's hanging out right around here at 85, right around 85. But we're over it. We're over it very good. And if we can close today's candle over it, then it'll flip to support. And that's one more step closer to this reversal that we keep seeing. I'm getting a little less pensive in my bullishness. But as long as this bear flag's here, my pensiveness is there. So let's see if the price action can get over 90. And if it can, I'm going to get more bullish. But at the moment, the Stokes here on the daily are oversold as well. Or I'm sorry, overbought as well. And we're just barely in bullish territory on the RSI. So stay pensive, my friends. Stay pensive. All right. Thank you so much for watching. Music courteously provided by Luminist, Valoa, and Sax Squatch. You guys are awesome. Keep that ish up. Much love. See you later.